Hello friends, thanks for joining me again. In front of you is a chart of Bitcoin futures, a weekly chart. I cover this every week in my ASX and overseas futures weekly chart analysis. It's a really instructive chart. It gives clear indications and good to identify some of the principles we talk about on this channel. There's 3 gaps on this chart. And gaps are usually generated by the professionals in the market for a reason. They rarely happen organically or by themselves. This first one was showing intent. This was a breakout and the market was intending on moving higher. The market professionals were intending on taking this market higher. This one was likely holding the market up while supply is being drawn out. And this one is almost the exact opposite of this first one. This one is likely showing sentiment in the market has changed considerably. We've had a couple of down bars which are representing supply coming in, and this gap lower is possibly an intent to move lower. Let's look at it in a bit more detail. And today we're looking at whether supply is coming in and how you can tell. Now, right back here, you can see price was just breaking out and there was a nice little gap out here. And this was showing you intent that the market was going to move higher. Price pushed up to here. Price then went through a period of consolidation. Initially, some supply was drawn out, but then supply reduced as it came back. And then price pushed back out again and moved up to this level. Now, there's been an obvious reduction in the thrust higher. The thrust higher is shortened. You see here, price made this much ground on this push higher, this much ground on this push higher, but only this much ground on the latest push higher. And the push higher last week appears to have failed. We've got a shortening of the thrust in the market. That doesn't mean the market's going to turn around and fall over, but it does give you a warning that the trend is beginning to become tired and may need to go through a period of consolidation and renewal to gain some strength and push higher again. At some points, the market will fall over at this point, but shortening of the thrust itself does not necessarily say that's the case. It's just a warning that the current trend is getting a little tired and there may need to be a period of renewal or consolidation or absorption of supply. Let's have a bit of a closer look here. Up till this point, you'd had a nice push higher, a nice consolidation, but then here you had some real volume come in, the highest volume that we'd seen, and it was on a down bar, and it had the widest spread on the chart, certainly wider than the previous 2 bars. This was supply coming in, there's no doubt. Someone took profits here, or some group, but there was no downside follow through and price continued higher, albeit with a shortened thrust. And then you had another down bar on the highest volume for a month here. So you've had 2 down bars. Now this next bar actually has a longer tail than that. It gapped higher. It looks more like that. Now, volume was very low to the upside. That means demand was low, but it wasn't really a no demand bar. The spread was a little too wide for that. There was some demand in the market. It wasn't particularly strong, but we can't say that was complete weakness. The next bar was a test for supply and a clear test. You would have expected the market to push higher in response to that, but we got what really is a serious no demand bar this time. Volume was much lower than average. Spread reduced considerably over the majority of the bars recently. The close was below halfway on the bar, so it was a poor close. And now we've had a down bar in response to confirm it. And this down bar in response also gapped lower and looks more like that. There's little doubt that there's supply in this market. Now, the obvious level to look at least initially, is this level here. You would expect price will test this level. It's holding on adjacent to this level at the moment, but this was a pretty weak bar. You might get some more no demand bars to the upside in response, especially on the daily basis, but it seems unlikely with 3 serious supply bars now. It's 1, 2, 3, that you're going to see any great upside in the near future. Sideways is best while there's some consolidation goes on. And price, if you get some actual downside follow through, you'll have to see how strong the market is here. Otherwise, the market is likely to come back somewhere around this level where the previous consolidation was done, which is in your mid 30,000s, somewhere in here. There's little doubt that there's supply in this market now. You've had 3 large supply events. The first one had the highest volume on the chart for the week. The second one had the highest volume for a month. And now once again, you've had the highest volume for a month. All on down bars, 2 with increased spread. There's been no demand in the market, moderately there and seriously there. And no demand after you've seen weakness in the market should be taken note of. If you've got strength behind you, strength in the background, and you get a no demand bar, it's generally not in the right place and doesn't need to be considered so much. So the 2 levels that I'd be looking at, if price gets below this level, this level here, if it can't sustain that, somewhere in here is more likely, which is around your mid 30,000s. Okay, that's been a lot. Hopefully that makes sense to you and you can understand it. You don't necessarily have to be trading Bitcoin. Understand the principle, understand what's going on and why. It appears that some profit takings come in. It doesn't mean that the whole thing's over and done with and it's going to roll over and go back to 5,000, but it does mean that the market may need to do some consolidation and solidify these recent gains to some extent. regain some strength, and then see if it's able to push higher again. Okay, that's my lot. Thanks for joining me. See ya.